When I first got into this space, it was because there was no transparency and you don't own the money in your bank account and you don't own the securities you think you own. And when you saw Lehman, you saw that there's a few collateral assets and there's all this leverage and it's a big game of musical chairs for who gets a slice of the collateral, right? Nobody owns anything. Blockchain changes that because it's provable who owns it. You can give permission to rehypothecate them or you cannot, right? So it's a game changer for that. But even in terms of trading, it gives you a whole new set of stuff you didn't have before.
Wait a minute, everyone. Welcome to Bitcoinzilla, your platform for daily cryptocurrency analysis and news. Our mission is to keep it simple. Bitcoinzilla offers engaging information that is easy to understand. Our analysts keep their eyes on the latest news to provide valuable insights via email. Don't miss out on this opportunity. Join our community of 10,000 subscribers and experience the new edge with Bitcoinzilla. Subscribe now. In today's video, Raoul Pal shares his prediction on the adoption curve of crypto and its potential to reach billions of users, the importance of building a network of trusted sources, and staying informed about new tools and technologies. So without wasting any time, let's dive into the video.
This is the banana zone, gentlemen.
Okay, so
This
tell
is
me what we're
every
seeing.
cycle. This is the banana zone. So what happens at about this point in time, what we call crypto summer, we have this little shuffle around the all-time highs, and then everything just goes bananas. So I don't care whether this is tomorrow or in a month's time, because to Phil's point, the number about to go up. And don't overcomplicate it. Everyone will overcomplicate this. They'll be looking at weekly charts, daily charts, hourly charts, tick chart. Just forget it. You should have a year plus to make a lot of money. This crypto market is the biggest gift retail investors have ever been given. Yeah, and that makes sense too. Look, with moves like that, you don't need to be over cute. Again, you can buy the breakout, and sure, it might even retest that, but it'll be fine. The ISM has gone above 50. It's the business cycle. So technology and crypto are driven by liquidity cycles, real assets, value stocks, commodities. They're all just the business cycle, and the business cycle's going up now. So these things have been playing catch up. They were dogs. Now, as the economy starts re-strengthening, these will do well. And so everyone got left behind because they didn't do anything last year, and now they should do really well. And they should do really well in macro summer, macro fall. So they should just keep doing well over time. They'll have periods where they'll outperform what tech did, because tech, went off to the races to start with. So I think it's very consistent. And bond yields are just a function of that too. If the economy's strengthening, then bond yields tend to rise somewhat. But the Fed can't let them rise too much because the Treasury needs to refinance all its debts. And we've got this massive debt payments coming up. So
Many crypto traders expect the Bitcoin halving event to be a pivotal moment in 2024 that significantly impacts the crypto market. However, analysts at Steno Research anticipate that it will be a buy the rumor, sell the news event. There have been 3 halving events in Bitcoin's history, reducing miner rewards from 50 BTC to 25 BTC in 2012, then to 12.5 BTC in 2016, and 6.25 BTC at the last halving on May 11, 2020. Steno Research says that BTC is likely to repeat 2016 halving, where selling pressure piled up to 4 months later. We foresee the next Bitcoin halving as a short-term buy the rumor, sell the news event, echoing the 2016 halving's pattern, this time around even with heightened anticipation from Bitcoin ETF holders, the research firm stated. Steno Research expects a surge in BTC's value leading up to the halving event. However, they say that the value could dip below its price at the time of the halving, within the first 90 days following the halving. Steno Research analysts identified parallels between BTC price performance before and after the 2016 halving, indicating that similar outcomes can be expected from the upcoming event. The report noted that Bitcoin's price remained below its pre-halving level for the entire 90 days following the halving. Specifically, on the 90th day post-halving, Bitcoin was priced 8.4% lower than before the halving. Steno analyst Mads Eberhard wrote, according to data from CryptoQuant, Bitcoin daily mining rewards are at their highest ever as the price trades close to its all-time high. This implies that even though the number of BTC issued will be the smallest yet, after the halving, the value of this issuance will be high when measured in dollars. The report explained that with the current price at approximately $71,563, this reduction now translates to $224,512 worth of Bitcoin, compared to the $55,000 the miners received after the last halving. Bitcoin miners have never earned as much as they have in recent months.
I don't have an issue with that. I don't think it makes much of a difference at this point. When the business cycle picks up, yields always rise. It's the economy, stupid. They're always the same with commodities. Commodities lead the inflation cycle, but 63% of all inflation is the super lagged owner's equivalent rents. And that's one of the reasons why gold is breaking out, because you've got to finance this debt. And also one of the reasons why the Bitcoin ETF had the largest ever inflows of any ETF in the shortest period of time. It's really important to understand that memes rule the world. Religion is nothing more than a meme. Everything is memes. That's how humans communicate with each other. All value is memes. Gold is a meme. Everything is a meme. Okay, so that's fine. But let me give you a number that I think people need to understand. Americans spent $110 billion on lottery tickets last year. There's a 1 in 300 million probability of getting the payout. Of a smaller payout of, let's say, $1 million, it's probably 1 in 20 million. But if you go to the meme coin casino in a trending market, your probability is probably 20x better. So if you are a 25-year-old, you have no chance of buying a house, the S&P is too goddamn expensive for you to buy it, here's your opportunity. You can make 100x, 1,000x, 10,000x. We've seen them all in the last 2 months. And so, of course, it's going to attract people, and it's rational behavior because they don't have a way out. So even, Phil, your example of Bitcoin going from 60,000 to 1 million, that's a 14x. That's not going to move the dial for somebody with $5,000. So they have to take risks.
April's Bitcoin halving, combined with a bag of tricks from the United States Federal Reserve and the Department of the Treasury, will add propellant to a raging fire sale of crypto assets and depress the crypto market for weeks, says BitNX co-founder Arthur Hayes. In an April 8 blog post, Hayes wrote he believed the Bitcoin halving would pump prices in the medium term, but warned crypto prices directly before and after could be negative. The narrative of the halving being positive for crypto prices is well entrenched. When most market participants agree on a certain outcome, the opposite usually occurs, he wrote. Hayes believes that the halving is also coming at a time when dollar liquidity is tighter than usual, and outlined his theory on how the U.S. Federal Reserve and Treasury policies impact the markets. That is why I believe Bitcoin and crypto prices in general will slump around the halving. It will add propellant to a raging fire sale of crypto assets. Hayes noted the second half of April would be a precarious period for risky assets. As U.S. tax payments remove liquidity, the Fed starts quantitative tightening, decreasing the money supply, and the Treasury's general account, TGA, basically the government's checking account, is yet to be used, Hayes wrote. After May 1, following the Fed's meeting on the same day, Hayes said he expects it to reduce the pace of money supply tightening, and the Treasury will release from the TGA, most likely, an additional $1 trillion of liquidity into the system, which will pump markets. Hayes said the halving in the Fed and Treasury's bag of tricks is why he's decided to abstain from trading until May. And do not forget to subscribe to Bitcoin Seller. The most important news will reach your inbox on a daily basis and for free. I do not know why you have not subscribed yet. If you liked the video, give it a thumbs up and subscribe for more daily updates. Remember, knowledge is power, and we're here to empower you on your financial journey. Until next time, happy investing.